Hi, everybody, and welcome back to EBnet Stream. I had the immense privilege of listening to Swan, the head of sustainability at Alexforbes, at the recent Batseta conference. Her topic was so important, I invited her to come chat to us at EBnet and share some of her thoughts around unpacking. I'll read from the agenda: unpacking key trends in sustainability, energy, and climate change regulation, and the implications of those for retirement funds. So thank you, Lee, for joining us on EBnet Stream.
It's an absolute pleasure to talk to you.
Lee, let's start at the beginning of this conversation. There obviously has been an evolution and a development or a refinement in the ask around sustainability. I wonder if you could sketch some of the highlights for us.
Yeah, there's a lot going on. If I sort of rewind time in my memory and think back 15, 17 years ago, gosh, you would never have imagined that we'd be where we are now. So I think a lot going on, but I think just overall quite positive in terms of general direction. Quite complex, so quite a bit to navigate. We're seeing, I guess, on a few different fronts. We're seeing a sort of trend around climate change. I don't think that that's any surprise, but we're seeing a formalization of that in regulation in South Africa. So around about this time last year, we had the Climate Change Act come in South Africa. So the first major piece of national regulation around climate change, really to cement and formalize much of the climate change activity that's been happening in South Africa and elsewhere, and how we're going to go about tackling that as a country. It sort of gives legitimacy in regulation to the Presidential Climate Commission, which does brilliant work diving into many of these complex issues. So I think climate is a big one. That's not internationally, but also locally now. So we'll see how that regulation starts to play out in terms of formalizing, some of the sort of direction of travel and the impacts of that. So I think that's quite a big one. We obviously have a ton going on in the energy sector overall. I think the last 10 to 12 years have been so fascinating to be part of the revolution around renewables in South Africa, and many of those projects now having come fully onto the grid, really generating great sort of levels of renewable energy into our grid. Firstly, to decarbonize, our electricity system over time, but probably more importantly at this stage in our context, to just bring additional gigawatts onto the grid. So anybody that's recently measured their carbon footprint, the portion of your carbon footprint which comes as a consequence of purchasing electricity from Eskom, etc., that's carbon emissions intensity per kilowatt hour that you would be accounting for is now much less carbon intensive. So generally carbon footprints going down as a consequence of that, which is great, good progress, but also more electricity on the grid. Sort of linked to the success of that program, which is now world-renowned, the Renewable Energy Independent Power Producer Program. It's a bit of a mouthful. It's world-renowned in terms of its overall success. Obviously, lots of hiccups along the way with a new program rollout, etc., but overall very successful. We're now starting to see similar look to open up the transmission side of the electricity sector to the private sector. So taking a sort of steer from, what's happened on the generation side on renewables, now also looking at potentially bringing private sector into the transmission part of the electricity system. So I think, based on the renewables program, if we take some of the lessons from that and transfer them into the transmission program, I'm hopeful that will be very, very positive from a few different perspectives. One is being able to extend the transmission grid nationally, which would be great. We need that. It will also enable infrastructure for renewables in remote locations, which in some cases would be great to build solar or wind in certain locations, but the transmission grid doesn't extend there, and so it's a tough ask. So we should see a more unlock from a renewables perspective in the private sector and also the public sector. But I think also the social impact of these programs is substantial. You know, being able to bring electricity to places that, you know, currently don't have reliable power, I think is massive from a social perspective, and also obviously the economic unlock as well. So quite a lot going on in this space. That's obviously not a comprehensive answer, but these are the things that I think are front of mind. And then what we see in parallel to some of these, I guess, you know, industry sector changes and structural changes, we're also sort of picking up a very substantial trend around disclosures around sustainability performance for companies, for retirement funds, for investors, etc. So that happening also in parallel to some of these things happening from a climate and energy sector perspective.
So as you say, a lot going on, a lot of development in regulation. The measurement I want to get to later, because that was a very interesting and exciting part of your talk at Batseta. But let's come back to the kind of intention behind it. And I think one of the more shocking things for me this year, and it's in a whole lot of shocking things, that the president of the US has come out to say, or to put his effort behind, is this concept that climate change is not a thing. And how does that impact our efforts in a small country like South Africa? And does it derail the efforts globally?
Yeah, it's a great question. Obviously, you know, I think the market is watching this carefully to see how it's going to play out. I think for us, you know, we're always going to look at it from a long-term perspective to say, you know, what do we think is going to happen in the long term versus, you know, what the current rhetoric of the day might be. You know, obviously the sort of policy rollback in the US has also impacted funding on various sustainability related items, some of those relating to climate change, which I think is fine. I mean, that's obviously the position of the national government in the US. But what we're seeing in parallel and potentially in response to some of that is a doubling down in other jurisdictions. So a real like doubling down on the commitment to you know, climate impact, reducing negative impacts over time, alignment with the Paris Agreement, which is the international agreement on climate change. So I think there's a lot sort of happening from that perspective. I think whilst in the short term, I think there's complexity to navigate. You know, I think if we fast forward 10 years, you know, fundamentally, I don't think the direction of travel is going to have changed. How we navigate that in South Africa, you know, I'm not picking up that we're intending to make wild changes in response to what's happening in the US. So I think the sort of sticking with the plan around the just energy transition, our Climate Change Act, you know, etc. I think it's likely to stick and stay. I think what we might experience though is a delay in terms of the implementation of some of the projects over time. There was funding coming from the US, which has now been withdrawn. Hopefully that will switch on at some stage in the future again, but we'll have to wait and see. So I think it's probably a timing impact at this stage. But yeah, I think overall direction of travel is the same as sort of before the current US presidency sort of took office.
Okay, so we're sitting in an environment where the conversation, whether it includes the US or not, is going forward. That's what I'm hearing you say. And so trustees, let's drill down into trustees and asset owners when it comes to retirement funds in particular. You mentioned it in your opening summary, but the conversation around climate change is not going away. So in fact, it's going forward and it's doubling down. I love those words. What is the role or responsibility of a trustee of a retirement fund right now?
Yeah, I think it's important, I think, for trustees to understand the science. So, you know, the science is very clear regardless of the political rhetoric of the day, whether that's in South Africa or elsewhere. So the science is what it is. And I think we're past the point of really questioning whether the science is pointing in the right direction. It's very substantial. So I think, you know, understanding that, not in detail, but the concept that it's science-based, I think means that they need to pay attention to it for sure and not get caught up in some of the rhetoric of the day. So I think that's important. I think trustees as well, you know, particularly of pension funds, you know, there's a fiduciary duty, obviously, to members and to the fund itself. And that's not only to make sure that members in the next 5 years are going to be fine or have decent outcomes, and the fund will be fine over the next couple of years. It's actually a long-term duty of care. So these things that may take a little while to play out, it's going to be too late if you wait till year 19 to deal with a problem that's going to impact in year 20. So that sort of thinking, the process of thinking more strategically, a little bit longer term than might be the habit of many trustees and POs. You know, we do need to start looking out at these things from a longer term perspective and making sure that, you know, that each of the funds is well positioned to navigate firstly through the shorter term complexity, but well positioned to actually deal with the impacts of climate change over time. I think we are in a position at the moment where avoiding, you know, catastrophic climate change, we're probably past that in terms of really sort of keeping the reins on it and rewinding backwards. So I think there's going to be a combination of sort of risk and potential opportunity. And I think, you know, trustees really do need to start to imagine what the future could look like and how that may start to impact on the fund and its members over time.
Coming back to the measurement and the disclosures, there are certain requirements that are placed, reporting requirements, and business process requirements that are placed on companies in terms of their business of doing business. And if I was a trustee, one of my comments might be, well, I'm investing in companies and it's the underlying company's responsibility, right, to make sure that they are climate aligned. Let's call it climate aligned, not even climate forward. Is that a valid argument?
To some degree, I guess, yes. But I think we mustn't underestimate the influence that retirement funds have in the capital markets, number one. And really taking a policy position around climate change or any other sustainability matter at a fund level is really going to create that trickle-down effect into the value chain. So I think that's quite important, rather than just leave it and you know, see which way the wind blows. I think that's going to be not in line with the fiduciary duty of a trustee. We are also seeing a rise in litigation around these kinds of issues, specifically on, you know, to pension funds. So I think we must be aware that members are taking this seriously and that trustees do need to understand this in the context of their fiduciary duty, but also their ability to actually have influence on some of the outcomes through the policies of the fund, and then how, you know, investments are made and the capital flows that go with them. So I think that's quite important. I think equally as important is not to just leave it to the underlying companies and hope for the best. So what we are doing, certainly in our umbrella funds and right across our business, is that we are putting in monitoring and management tools. So you can actually start to see your portfolio through the lens of various sustainability metrics, including climate-related metrics. So you can get a sense of whether the underlying companies have got it in hand, are actually responding appropriately, and it acts as an early warning sign for you as a governing body to be able to sort of intervene at the appropriate time and to track progress over time as well, and to understand the reasons for that progress. You know, is it just circumstantial? We obviously saw things like carbon emissions and whatnot go down substantially during the, you know, the COVID-19 pandemic, but not because people were putting some effort into, you know, decarbonizing. It was simply because the economy went into a slowdown. So really being able to interrogate with insight and information, you know, the reasons for, you know, some of the trends that might be happening in your portfolio, and drilling down to individual companies. You know, I think also important to understand that, you know, you may have a very small financial exposure to a certain company or sector, but it may be making up 40 or 50% the carbon footprint of your portfolio. So I think quite important to see it through multiple lenses in order to make good decisions as a governing body and to really direct the fund over time.
I want to touch on and drill down into this influence of trustees and the influence that retirement funds can exert. And one of the commonly cited reasons for not pursuing these types of sustainable portfolios that I've heard in the many sessions that I attend, much like Batseta and the recent Sanlam Symposium, is that there's no investable deal flow. So there's just, I really want to do this. I have a sincere intention to do it, but nobody's bringing me a valid or an appropriate investment portfolio product thing that I can direct the fund's money to. What are your thoughts around that?
Yeah, I certainly think that it's improving. I think things like blended finance on really substantial large projects, for example, or portfolios of projects, I think are going to play a role in unlocking a portion of those projects, in an acceptable risk profile to be invested in by pension funds and other commercial investors. So we're seeing a lot happening from a multilateral banking perspective, a development bank perspective on the continent and also in country. So I think that is going to help to unlock and bring investable projects at scale over time. So we should see this, for example, in that transmission program. We should see that start to play out. We saw it in the renewables program where commercial investors were able to actually invest at an appropriate risk level relative to the potential return. And my sense is that will only improve to scale over time. There is a shortage of projects, and I think there is a learning curve to go through, but we will get there. There's a lot of smart people working in the market at the moment trying to solve for this. That kind of risk, return, impact trifecta, I think is very, very important. I say impact as being critically important and particularly important in the context of retirement funds due to the long-term nature of what a retirement fund is and the sort of savings profile for a retirement fund. It is critically important to understand the impact, and the impacts of today are the consequences of tomorrow. So, if it's a negative impact that's unabated, ultimately the retirement funds are going to inherit that. So an interest in what's happening from an impact perspective is critically important, even if that may only actually bite at some point in the future, because you're going to wear the consequences of either way. Different to short-term lenders, I think, where they're agile enough. The fund itself does actually need to think longer term, because you're going to be inheriting much of the stuff either which way, and it may be after your sort of term, as in terms of your term as a trustee on the fund, but it doesn't mean that you can't be held to account in terms of your fiduciary duty today and the consequences that may play out in the future. So quite important, I think.
The learning curve that you've referenced. And this is where I want to get onto the reporting that you shared with us at the conference, which was very exciting to me. The learning curve, to learn, you have to be able to understand that there's a problem, right? And to date, information around carbon emissions and other societal impacts of our investments has been sketchy at best. So myself, I'm a management committee member. I ask for this type of disclosure. I don't get it. And it really, it doesn't allow me to make an informed decision. So it feels like you're operating a little in the dark. I want you to share with the EBnet community some of the reporting that you profiled at Batseta and how this can position decision makers and asset owners to make better decisions when it comes to sustainability.
Yeah, it's been an area of deep focus at Alexforbes for a number of years now, is really to be able to see portfolios and the fund more holistically through multiple lenses. I think we're all very familiar at looking through the financial lens. Are we getting the returns this quarter, this year, our 1, 3, 5-year outlook, and maybe a 10-year outlook? I think we're all very well versed and rehearsed on, what we should be looking for there, identifying issues and problems and red flags. but that's only one view really on what's happening in your fund and in the portfolios that it's investing in. So we've put a ton of effort really into developing the more balanced view, which looks at sustainability more holistically in parallel to that financial performance. So we've developed tools that are able to map entire portfolios or parts of portfolios or in individual companies within a portfolio against things like the United Nations Sustainable Development Goals. So you can actually see your whole portfolio in the context of these 17 goals, one of which is climate change, but it looks at also social issues like gender, inequality, education, the basics around water, food, etc., in addition to governance type issues. So it gives you a completely different perspective and lens through which to see your portfolios. And looking at them together is very, very powerful. That kind of, much more familiar financial view and this broader sustainability impact view, I think is extremely powerful to inform, firstly, really high quality discussions, ask great questions, have high quality discussions and do that in an informed way. And hopefully that then leads to better decisions over time or more balanced decisions over time, in addition to obviously great financial management and oversight. So I think that's pretty powerful. On issues that are of particularly strategic significance, climate being one of those, this ability to drill down, identify those critical issues, ask questions that drill down into the detail when there maybe is a concern. I think that's going to become more important over time as well. So we spent a ton of time really sort of developing this out from an analytics perspective, solving for the complexity around data. Whenever we talk about looking at sustainability, data availability, data quality and reliability always comes up. It is improving over time, but I think also there are sort of judgments that you can make quite sensibly along the way to create proxies for things like data gaps, etc. So we've worked quite hard in making sure that our underlying process, is defensible, and it does actually lead to very insightful information upon which you can make good decisions over time. So I think that's going to be quite helpful. We've even gone at Alexforbes to the extent of acquiring a really fantastic impact business. So that's Paragon Impact. You would have heard me speak about it. Really fantastic business in terms of understanding that impact view in a lot better detail. So we've acquired that business. We use it inside of Alexforbes already and have done for many years. So when the opportunity to invest in that business came up, it was a no-brainer on our side. But we really do think that it's quite a powerful set of tools in parallel to what we currently do, that many retirement funds can benefit from. And that enhanced sort of impact view of your fund over time, I think, is going to inform decision-making quite powerfully.
I want to share with the people who are watching this the information that Lee shared at Batseta is, as she said, a very powerful report drilling right down into carbon emissions, into impact in societies, in communities. And it was enormously exciting for me to see that this reporting is on its way, is available in our country and is on its way. Very much to enable trustees and decision makers to ask the right questions, because that's the key here. You can't get the right answers if you're looking in the wrong place. So Lee Swan, thank you very much for spending time with me this morning and sharing your insights. There are a number of topics that you touched on that I've jotted down, so I'm sure we'll be chatting to you again. And thank you very much for spending time with us.
It's been an absolute pleasure. Thank you for having me.